Can you trade 1 hour a day? Stay tuned, traders. We'll be right back. G'day traders, I'm Stacey Burke from Stacey Burke Trading. It's Thursday. We've had some huge moves in the markets the last few days, and equity markets having some big moves overnight. The bond market's starting to give off some different signals. Lots happening. And gold, of course, as per usual, has continued to be moving in every session, and the pound as well, offering traders some great trades. Some of the US dollar pairs as well moving and giving some excellent 50 pip trades. We're going to talk about today trading 1 hour a day. Now, being in Perth, obviously the time zone here allows me access to Asia, London, and New York, all within sort of the daytime, early morning to sort of late evening for all three markets. But one of the questions that I get asked from traders from around the world is, how can I focus if I can't trade London, or if I'm in this part of the world and I can only trade these times? And we're going to talk about that today, the very specific times that I look at the market and what I look for and how I like to be done in 1 hour, ideally, unless of course there is a second hour setup, which we'll talk about. But before we do that, again, I'd like to say thank you to everybody. Some excellent comments, some fantastic feedback, some traders literally catching 150 pip moves on gold, 100 pip moves on gold, 50 pips on the pound, 50 pips on the Canadian dollar, points on the indexes. So again, a lot of the concepts that we focus on here, whatever instrument that you're trading, will definitely relate to timing and round numbers and highs and lows. Those are three constants in every single market, regardless of the instrument that you're trading. Before we get started, do me a favor and hit the like button. Again, that's made a tremendous difference to the channel. A lot of new subscribers coming on board and a lot of great feedback. And again, just trying to improve the content. My main focus is trading, but I'm talking about the same things that happen every single day in the timing window. Asia, London, New York, and in the, as we talked about the other day, the 4 hour rollover times. A great example today in gold. Again, we'll look at that, we'll review that example. Again, just targeting specific setups at specific times and looking to be done at that time and walking away from your computer. I just got back from the beach, and I don't say that to rub it in your face in the northern hemisphere, but just pointing out that when I'm done, I shut it down, I force myself. I've learned a great quote from Jocko Willink, ex-Navy SEAL: discipline equals freedom. So if you stick to your trading rules, you can create and achieve those goals, the lifestyle that you want. And again, just being patient and sticking to the rules that you've created for yourself, the opportunities are there. And we're going to have some tremendous opportunities, I think, in the future coming, because we are at a tipping point in some of the major markets, and there are going to be some massive opportunities for traders. Okay, so let's talk about being done in 1 hour. So I've talked about this in some of the other videos. We'll start right from day Asia. My day starts with Asia. I talked about looking at the most recent 4 hour high-low bar. And again, most of the time that will be around or near quarter or round numbers. We might have a 50 pip box. We might have a 25 pip box. For simplicity, we can call this 0, 25, and 50, which means obviously we've got 75 above, 75 below. But most importantly, we have somewhere in here, we'll have a high and we'll have a low. And when Asia starts trading, what I want to know is if that 4 hour boundary is broken at any point. Now, I talked about this in one of the most recent videos about those 4 hour boundaries. And the same applies for the 1 hour bar, and we'll talk about that as well, because inside of the 4 hour boundary, we may also get a market that goes into its next 4 hour cycle and it stays inside of those highs and lows. We saw that in gold this morning. They established at the rollover a new 25 pip high and low. The market in that first hour eventually broke out towards the end of that second hour. We had a rectangle for structure heading into the open. In the open, we're going to be somewhere at numbers. It may be at round numbers, it may be at a quarter level. But I know that we're going to get a stop hunt. Now, typically in Asia and London, those stop hunts will be 25 to 50 pips. Now, if you're not already in the market from the move, possibly prior to the market moving, if we have a breakout or a trend happening, we want to be trading in that direction. Now, if the market has moved away before it opens, then I'm going to be looking for a stop hunt, possibly back into that trend trade. So we have different scenarios about how the market's going to set up as we go into the open of that session. Okay, but our basic pattern applies. We have a high, we have a low. We know there's stops above and below. What I'm essentially looking for is our basic pattern, whether it's down low or up top. We want to see stops hit, and eventually either a trend trade or a pullback and a rollover for a trend trade the other way. But in that initial first 15 to 45 minutes, we may already be up here right off the bat. They may put a pin through the high. We could have a short trade for 25 pips down in the beginning of the session. So we get a short trade for a 25 pip down because they've hit the stops, they've given us an engulfment, or we're at major round numbers, whatever that may be. And again, that comes back to where our peak formations are from that 4-hour window. The market comes down, we may get a reversal engulfment off the low now with our original break long, and that may be a 25 to 50 pip move in the other direction. Often in Asia, you know, we can see some large range moves, same thing with London. The most important thing to understand, though, again, is that stops must get hit before I enter the market. Now, if I'm in a trend trade, that's a little different. There are exceptions to that rule where the market has broken out of a structure and we're moving into the open, possibly at round numbers, and they may break out with that initial burst, pull back, and continue the trend. That's not that common, but we do get them. In that first hour, we will often see a move of 25 pips minimum, because and in that initial first 15 minutes, we may have hit the high or the low. So when that next hour opens at the beginning of the session, come back to what I just talked about breaking structure. If the market's been working higher and it pulls back, and at the beginning of the next hour, at the open of our 12 candle window, they go up and hit the high, that break of the high now triggers 1 hour traders into the market. Now, we may not have broken a 4-hour boundary, but we've now triggered 1 hour traders into the market. If we're going to see a reversal, we'll see that very quickly at numbers, and specifically major round numbers, 50s and double zeros. And again, if we have a creeping trend, as we've talked about, once they trigger that breakout trade, I'm looking for a reversal. There's our shortened M or our extended M or just our normal M with a pin through the high, or they've already hit the stops and the next hour will roll over. That market can go 25 to 50 pips in the other direction, typically at least to where the move began from. So again, creeping trends. We talked about the different types of pattern of the trend. So the pattern of the trend, is it a creeping trend? Are we sideways between a horizontal box where they're just possibly going to maybe hit the stops, consolidate, and we may see a vertical move? Or are we in a market that's been creeping going into the session? So we might see a breakout, pullback, continuation, or we might see a hit the stops, and reverse. So it's if we get a double stop hunt, we can get the extended M, we can get the shortened M, or we can just get an M formation, a double top. Same thing applies for the reversals off the bottom. We can get a shortened W, we can get an extended W, or we can just get a double bottom reversal. Now, the other potential scenario is that the market works up in 3 pushes and we get a peak formation, which essentially is our extended M formation, which we saw yesterday in London on gold, then the market will typically go into consolidation. When you get this sideways consolidation underneath a peak formation on the third level, okay, this market is now poised for potentially a large move, and it will often be a measured move from the last low before the high and the peak formation of at least 2 times an expansion of that range. So coming back to what we're talking about, can you be done in that first hour? There may be a stop hunt right off the bat, and then a 25 pip move down, and then a reversal possibly for 25 to 50 in the other direction, and this is all within that first hour. This is in gold. So coming back to this, know the instrument that you're trading. Your instrument may only be going to move 25 pips in that particular session. So wherever you're at globally, for example, if you're trading the pound in Asia, you're probably not going to get much movement. It doesn't typically move. We do get days when the pound moves in Asia and it takes off. Typically that will be a second day trade. But for the most part, the pound, you want to be targeting London or New York. Indexes, obviously, if they're depending on the region that they're traded in, I would focus on the time zone in one of these 3 sessions where that index is based and trades at for the largest volume of liquidity. S&P 500, I'd be looking at New York. Does it move in the other times? Absolutely. I'd be looking at New York though, because that's when it's really going to swell. So instead of 25 to 50 pips like gold, we may see a 100 pip move right off the bat, or a 150 pip move, which again comes back to those 3 levels. If it's moving in 50 pip boxes, I'm going to look for a 150 pip move. If from high to low, if it's 50 pips, I'm going to look for a minimum of a 50 pip stop hunt. Structure is so important, and so is the pattern of the trend. If you're in a sideways horizontal consolidation into the open of the market, we want to be working off of the extremes, and we want to wait until price has hit those extremes. And that comes back to understanding even the hourly rotation. If they spend 45 minutes to an hour inside of a high and low, chances are that the next hour is going to break one of those boundaries. And again, coming back to what we talked about in the other video, the 4-hour video, when that boundary gets broken, when stops are hit, they are triggering other time frame traders into the market. And if those other time frame traders are caught in the wrong direction, we will see a reversal trade that will move very quickly and aggressively to the other side to hit stops. So again, understanding how big is the box or the high-low range that you're trading in. You can easily take 25 to 50 pips in that first hour of trade in all 3 of these sessions. And obviously with gold in New York and the indexes, sometimes there's more than that. But the instrument that you're trading, it's important to know what its movements are like, which sessions it tends to move the most in, and then again, are we at major round numbers? Where are the highs and lows? What's the pattern of the trend? How does it react in that first 15 minutes? Is there a breakout right off the bat? Do they hit stops first minute, the second minute, heading the other way? Just little key things. How do we know if stops have been hit? Well, there will be a pin through the high or the low. Sometimes they may creep into it and reverse. If there's a peak formation and they work into it, we'll see a reversal inside of that peak formation, an engulfment, and the market take off in the other direction. So you won't always have a market take out the extreme, but again, understanding, are we in a breakout pullback continuation? Have we had a false break of a high or low for a reversal trade? Or are we merely in a trading range, which again, depending on the size of that high-low range, is it worthwhile in terms of risk reward, and how will we know timing wise, again, the rotation of those hourly, 4-hour and 15-minute cycles to know if we're potentially now going to see the next bar reverse and go in the other direction. I like to be in the market. I know there's a lot of other trades in these other times, but when those time frames roll over, when the market opens up, we have highs and lows and stops get hit, I want to be in that market with a 1-bar stop at the high or at the low. I try never to trade in the middle because it's 50-50, especially when they first open up. I wait for them to go to one of the extremes, and then I'm either with the breakout in a trend trade, or we're looking for the reversal for the move back in the other direction. And somebody mentioned it to me yesterday again, understanding that nobody gets a free lunch. They will come back at some point and get somebody who's in the money. So that equity hour, that middle hour, in between 3 a.m. and 9:30 a.m. New York Eastern Standard Time for London and New York, again, will often offer traders another trade once the equity market's open. They'll often, again, hit stops for a breakout pullback continuation. So sometimes we'll see a big move in that first hour in New York. Then they'll work it into the low at the opening of the equity hour or into the high and reverse it in that next hour. So again, that 4-hour rollover time, when the equity market hour is done and we head into that third hour, that is the beginning of the next 4-hour window for gold. So somebody told me that on TradingView they use the normal 4-hour times. I use the times that when the day starts, that's the first hour of the day. Those are my 4-hour candles. But as I mentioned, it doesn't matter as long as you're consistent with what you use. It really is irrelevant. So high and low, major round numbers. I want to know, have they hit the stops? If they've hit the stops in that first 15 minutes, chances are now I'm looking at trend trade or a reversal trade, and I want to be done with 25 to 50 pips. If it's the US, it could be a lot more. Again, we could get a 150 pip move. We might have a 100 pip stop hunt. But once I'm done, I take my pips, I shut it down, and I'm done for the session. I know there's other trades, but I also know that the longer I stay at the screen, there's a likelihood that I could get caught into some positions and now start eating away at profits. I want to lock it in, be done. Again, scale those trades up in size and keep it simple. Get off the screen, go do something else, and enjoy your day. We'll take a look at some examples the last few days on some of the US pairs as well as gold, obviously. Again, thanks for a ton of great feedback. Focus on 1 or 2 quality setups where you can be done at the high probability times. And again, those 4-hour times in between can offer some fantastic trades if they break to the extreme. So again, remembering, understanding that if they break one of those boundaries, now we've got other time frame traders in the market, and if you're a breakout trader, whether it's end of day or anything else, they are going to come back and put some heat into that position. And again, it's going to be a minimum of 25 to 50 pips in most cases. So stay disciplined, traders, stay focused, keep it going strong, 1% better every single day, and may the markets go with you.
Good day, traders. Stacey, Burke, continuing our discussion on can you be done trading in 1 hour at the opens. And of course, everybody's trading in different parts of the world. I talked about using the 4-hour highs and lows. Doesn't matter where your 4-hour, if your day starts at whenever the rollover is, if that's where your 4-hour bar starts. You know, for me, that's when I start mine. I know gold has an hour lag time to some other major pairs, but ultimately, what matters is that you're consistent with what you do. Again, we talk about looking at the rollover heading into the U.S. close, and if there's any pattern of the trend. I talked about this the other day. Structure, we had a breakout into Friday's close. We'll just reset that weekly indicator. And we were in a breakout, and then on Monday morning, that breakout continued. So again, I'm not going to zoom in just yet. I want traders to understand the idea that a 4-hour high was broken. And into that rollover, this is now a breakout. It is not a false break. This market has broken out and moved 75 pips. Into Monday, it's pulled back. We're between double zeros and 50. So again, constantly looking at my round numbers, the market broke out of a 4-hour box that broke through the double zeros and continued to move in that double zero box. Prior to our session open, the market pushed above double zeros in 3 pushes before engulfing and pulling back. So again, I mentioned that if a market breaks up there, this is a 2nd-hour breakout. Okay, understanding that the market breaks to new highs in that 2nd hour. Now we have 1-hour traders triggered. Okay, we also have higher lows in that breakout in that last 15 minutes and first 15 minutes of the new hour above the quarter. The market moves down 25 pips prior to the market opening. So again, clearing out stops even in a breakout. So even though it's pulled back inside, we have a breakout, we have a trendline break in a stop hunt, 25 pip stop hunt, before consolidating and engulfing down at 75. So again, we know there are stops above the range from that initial breakout. Second hour traded higher. This is a pullback into that first hour. So again, understanding that this last hour has made a new high. Micro W engulfment. If we were long off the bottom into the open of this market, we had 25 pips right off the bat. Knowing that the market will come back and stop hunt and not give anybody a free lunch, I pre-program my targets on all these trades. If this, ideally I know in that first burst we're going to get a stop hunt, and we'll get a stop hunt in the opposite direction as well. Again, we have a breakout. We're in an upward moving market, but I'm expecting them to come back and get the traders who are right off the bat. So we preset for 25. The market pulls back and goes sideways on top of the original breakout. Again, we get a 3-bar consolidation before the market pulls back inside of that initial burst above double zeros, retests, and continues above double zeros. So again, if traders were considering trading along with the trend, we have a second entry. I know some traders bought the bear candle when it came back inside on the false M pattern. So again, they got caught selling into the move, the long trade. So we have 25 up. We back in the market. And now this is where traders, if you're trading with the trend, may be going for more than 25 pips, because we know that the initial trade was the stop hunt. We got a stop hunt back into that breakout before the move continued. Now we're in a potential trend trade. We have a high-low for structure. We had that structure breaking out of our original 4-hour rectangle from Friday night. So again, projecting those values together gives us something in that ballpark of at least 40 to 50 pips minimum if we were to resume that long trade. So again, this is in the first hour only. So this market pushes up for the first 30 minutes and doesn't quite get to 50 before pulling back. So again, our 25 pip box quarter level has been broken through and pulled back. It's the same principles: breakout, pullback, consolidation, and continuation, heading towards the next round number box, which is 50. And the market does the same thing. It breaks through 50, goes into consolidation before pulling back, and a 2-bar reversal to continue that move. So we broke above double zeros, we pulled back, we traded underneath of the double zeros to continue that long move. So again, traders 25, they may have 25 and 25. They may have went for 40 on that second trade. They may be in the second trade to hold on for as many as they want. We're still in this first hour. We get towards the end of that hour, and we get the beginning of our our second hour trade, which is this little bear candle. So again, the first hour traders had the opportunity to grab 50 pips, 25 and 25 or more in that first hour. And again, a strongly trending market, traders may consider again taking another entry with the trend after the pullback. They're on top of 50. We get a 2-bar reversal, and that market proceeds another 50 pips in the long direction. So again, coming back to our original
pattern.
Hi
traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High-Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.